All righty. I think the webinar has officially started. And welcome, everybody. My name's Luke Robinson, and I'm a new business advisor from Collective. And essentially, I'm here today to share everything about everyone's favorite topic, their most riveting topic, taxes and business structures. And I'm here with Meghan, of course. And today, before we get started, if you guys don't mind, kind of when we just wait while we let people trickle in here, in the chat box, tell us where you're from. Where are you tuning in? And because we're interested.
Thank you
And
guys for joining. I'm going
yeah,
to be learning a lot because I have no idea how to navigate taxes as a business owner. So I'm super excited for this webinar.
that's why I'm here. So we'll teach Meghan, we'll teach everybody here. And also, kind of as we go through this, we'll be going through a lot of information. And at the end, we'll have a session for a Q&A. So if anyone would like to ask any riveting tax questions, I'll be here to do that. And I believe we have and I have my, excuse me, but I have my amazing colleague, Sarah, here. She's going to be assisting me with the webinar. She'll be kind of in the background handling the logistical stuff. And I believe there will be a Q&A box that you'll be able to share some questions. But it looks like, okay, Tacoma, Washington. Okay, that's where Sue's from. I feel like I've heard of Tacoma, but I didn't actually know where it was. So now I know it's in Washington. Okay, and Yitza is coming from New York City. Oh, it's just south of Seattle. Okay, well, now I know. Okay, well, I think we can go ahead and get started. Um, and really today, the main question that we're going to try to answer is LLC versus S Corp. Which one is right? What even is an S Corp? How is it different from an LLC, and how does that all work? Um, and before we do this, a quick word about Collective is Collective. You can think of us as kind of like an all-in-one solution for an S Corp. And when you're a self-employed business owner, you've got several things to juggle already. You're running your business, and the tax side of things and the financial side of things is usually a good idea to outsource, and that's where we come in. But let's go over the agenda. For one, of course, we'll overview this stuff and kind of see what's going on. But then we'll kind of get into some self-employed taxes 101. Kind of the basics of what it means to be self-employed and how to run your taxes. Then we'll, of course, get into the main meat of the conversation here is what's better, an LLC, an S Corp, the basics about them, what's the difference between the two, and of course, one of the most important questions is which is the right structure for you. And then once we discuss that, we'll talk about how to get started. And at the end, we'll do some Q&A. Oh, yeah. Let's get the legal stuff out of the way real quick. So technically, this webinar, it's educational only. Don't consider it, official legal advice or tax advice or anything like that. Before you act on any of this advice, it's always a good idea to talk to a CPA, talk to a tax attorney, just to verify things. Collective. So, like I said, think of us as kind of like an all-in-one financial platform designed specifically for self-employed people. And we're really kind of the first tech company that handles everything you really need to be when it comes to an S Corp. And before us, you had to go, to a CPA, kind of a brick and mortar firm, and it wasn't the most convenient and fun experience. But Collective's totally different. This is your money when you're self-employed. Long story short, it's all over the place. For one, how do you even know how to set up the business? What's my proper structure? How do I even do that? Now that you're self-employed, you have estimated taxes that you need to pay quarterly. And to even know how much taxes to pay quarterly, you have to have accurate bookkeeping. So it's all over the place. Also, when you need to make a financial decision, it could be a little bit more complicated when you're self-employed, because any sort of financial decision, like buying a house, buying things for your business, or buying things for your family, It all has to do with these things that kind of interlock with your business as well. Your money at collective, though, is all organized. You know, collective with kind of its all-in-one sort of approach to your taxes and bookkeeping and whatnot. Everything's handled in one company, and you can sleep at night. Okay, and I think this is a poll question. And of course, what are you struggling with right now, specifically with your business? And I think, Sarah, here we go. Which one are you struggling with? Setting up the business, the taxes, the bookkeeping. It's a different answer every time, so I'm curious. I always try to guess. I'm going to guess that it's setting up your LLC or S Corp. We'll see if I'm right. I'm usually wrong.
I'm gonna guess taxes.
Okay. Probably know better than me. We'll see. I'm not going to bet any money or anything because I don't want to. All right. I think we can probably shut it down. And you're right. You beat. It's taxes. Well, hopefully by the end of this presentation, you'll be a little bit more knowledgeable about what to do. All right. Well, let's get into some basics of what it means to be self-employed. This right here, and we'll kind of start with the taxes that you actually pay. What are the main tax rates that you even pay when you're self-employed? The first one are income taxes. And this is what people usually think of when you hear taxes, is this is the federal income tax. And essentially what it is, it's its marginal rates, and it's based on brackets. So different sort of chunks of your income get charged different levels of tax rates. So with a marginal rate, let's say that you make, $100,000 in total. The first $10,000 might be charged 10%. Then from $10,000 to $20,000, that might be charged 15%, and so on and so forth. That's kind of how the income tax works. Then, in addition to that, you have the self-employment tax. And the self-employment, that works a little bit differently. It's a flat tax rate. So there's no marginals, there's no brackets. It's a flat tax rate of 15.3%. But, and I'm getting ready to blow your mind, so hold on. The self-employment tax, literally what that is Social Security and Medicare taxes. It's what it is. So it goes to fund our Social Security and Medicare programs. And even when you're an employee, like when you work for somebody else, you pay the self-employment tax because you pay the Social Security and Medicare tax. And what's interesting, it's even the same tax rate. Like it's 15.3%, but when you're employed, when someone's employing you, rather, your employer pays half of it, and then you pay half of it. Just by law, they're required to pay half of it for you. But when you're self-employed, you pay the whole 15.3%. There's no one there to pay half of it for you. That right there is why it's so expensive to be self-employed. Why it's so expensive in a tax context to be self-employed. And kind of why you hear a lot to where, man, it's like I feel like I used to have a W-2 job. Now I quit and I have my own business, but I just feel like I'm getting slammed in taxes. This is why. It's because you pay the full 15.3% of the self-employment tax. All right. This is kind of how taxes work when you're a sole proprietorship and when you're an LLC. It works the same. And when I say sole proprietorship, I mean just simply not having an LLC set up when you're just kind of, doing everything under your Social Security number. You have your revenue, which of course is just every dollar your business makes, every single dollar that a client pays you, any brand deals you have, whatever you do, that's your revenue. But then you get to write off tax deductions, which is just a fancy word for business expenses. You can write that off. And then you can write off things like your home office deduction, a portion of your mortgage interest, utilities, things like that, and mileage, marketing costs. You can write off a bunch of stuff. Then you get to your net income. And that net income is either positive, which means you have a profit, or it's negative, which means you have a loss. And when I say negative, I mean that you have more expenses than you do income. So it's possible for a business to have a loss. And either that profit or the loss will be reported and kind of flow to your tax return, to your personal tax return. That's kind of how it works with a sole proprietorship or an LLC. And that profit is subject to the self-employment tax, the full 15.3%, and the income tax, both. That's kind of how the flow works there. Why does this matter? Well, it matters because how you're taxed is different, whether you're an LLC or an S Corp. Kind of how you set up your business determines how you're taxed with the IRS and how much tax you pay. And for one, what even is an LLC? Like, what does it mean to set up an LLC? An LLC is a legal structure. It's a business entity, and they're formed with your Secretary of State's office. Wherever you live, you go to the Secretary of State's office, and you can usually form an LLC online. And it requires some sort of organizational process. Like you have to file forms with the state. And then usually you have to file an annual report letting this, or I believe biannual reports every 2 years, which means you have to let the state know, who manages the entity, whether or not it's still up and running, and all that good stuff. What if you don't have a legal structure? What if you don't have, any sort of corporation or LLC set up? You are a sole prop. You're a sole proprietorship. And there's nothing really that you need to do. Sole proprietorships, there's no annual reports, there's no business entity. So you don't have to file anything with your state. Everything happens on your personal tax return. Here's some basics about LLCs. Requires registration with your state, of course, and ongoing state reporting, and sometimes annual state fees, just kind of paying the state $100 or so a year to keep your LLC up and running. Also, it provides limited liability protection. And essentially what that means is in certain situations, if you're sued, if your business owes, some money to creditors or anything like that, they typically can't go after your personal assets or personal income via lawsuits. It lends credibility to your business. When people see that you have a structure set up and some sort of legal structure set up, it makes you look more professional and easier to deal with. It allows for multiple members. There can be more than one person on an LLC. And essentially what that means is you now have a partnership. That's what a partnership is when you have 2 or more people on an LLC. And then, of course, all the business profits pass on to you as the owner if you have an LLC. An LLC, interesting enough, is taxed just like a sole proprietorship. There's no difference in the IRS's eyes between a sole proprietorship and an LLC. You're taxed in exactly the same way, unless you ask the IRS to change how you're taxed, which you can do that. And here's kind of like just the main differences between a sole prop and an LLC. For one, you got to register your state, or I'm sorry, you have to register your LLC with the state, which of course you don't with a sole prop. You don't have protection of the sole proprietorship. There's no legal shield between your business and personal assets. You can't have multiple owners as in a sole proprietorship. It's just you. And at the very end here, we'll skip to the bottom. You can't change how you're taxed as a sole proprietorship, but you can with an LLC. And we'll get more into that here in a second. And that brings me to my next topic, and it's an S Corp. What is an S Corp? And this has to do, like when I said earlier, you can change how you're taxed with the Internal Revenue Service. This is where the S Corp comes into play. An S Corp is a tax election. And a lot of people have kind of a misrepresentation about what an S Corp actually is. They'll hear the word S Corp or S Corporation or whatever they hear, and they'll think that it's a corporation, that it means that it necessarily is a corporation, but not necessarily. It's a tax election. So you have to have some sort of business entity set up like an LLC or a corporation before you can even elect the S Corp tax status. So what happens when you're an S Corp or when you elect the S Corp status is you don't pay the self-employment tax on the business profits. And essentially what that means, and what I mean when I say business profits, is when you make an S Corp election, and how you do that is you file paperwork with the IRS. You do that with the feds. What that does essentially is it creates kind of like an employee-employer relationship between you and your own business. Now, you're still the owner, of course, like it's still your business, but for tax purposes, you literally become an employee as well. And since you're an employee, you will pay yourself a wage. You'll pay yourself a salary, just like you receive if you work for someone else as a W-2 employee. But the cool thing about S Corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary amount. The rest are business profits, and they're no longer subject to the self-employment tax. So we've kind of already gone through this. This is just kind of a recap on how you're taxed when you're a sole proprietorship or an LLC. This is how it works, though, when you're an S Corp. You have your S Corp revenue at the top, your total amount of money. And then you have your expenses, which is all your business deductions and whatnot. And then you have a salary that you pay yourself, a reasonable salary, whatever amount that is. And then only your salary amount is subject to the self-employment tax, which is another way of saying payroll taxes. Like if you hear payroll taxes, they all mean the same thing. It's that 15.3%. Then the S Corp itself will have a profit or a loss after you subtract your salary and your expenses. It'll have a business profit or loss. And that profit flows to you. It flows to your owner's tax return. It's your money. You can spend it however you want to, but it's not subject to the self-employment tax, the 15.3%. Only your salary is. And then everything's subject to the income tax. That doesn't really change. Like your income tax will stay the same between LLC, S Corp, and everything else. All right, so let's kind of get into a difference in how this actually works, like, where the tax savings actually come in. And here on the left, this is an example of how someone's taxed when they're making $160,000 in net income and profit. And on the left, you see a sole proprietorship or LLC. You see the 160 grand, and you see that it's fully subject to the self-employment tax or the payroll tax, the 15.3%. And that's $24,000. Like, that's a big chunk out of the income right there. With an S Corp, though, you make the same amount of money, but you can pay yourself a wage. And in this scenario, for whatever reason, it's been deemed that $60,000 is a reasonable salary for this. So then only the $60,000 is subject to the self-employment tax. So your tax goes down from 24 grand to 9 grand, which is a big difference, obviously. And it's a $15,000 difference just by changing your tax structure. And then, of course, you have the $100,000 of your pass-through profits that still flow to you and that you can still use at your discretion. Okay, so a little bit more about the salary and what it means. And it's funny because I'll get asked a lot, well, if I'm only subject to the self-employment tax on my salary, then, why not just pay myself a super low salary and take the rest in business profits? Why not pay myself like $1 or something? And my response is that you'd probably get audited, unfortunately. What the IRS says about the salary is that it has to be reasonable. Got to pay yourself a reasonable salary. If you don't, unfortunately, you could get audited. But that's where your tax professional comes in, or that's where a collective would come in, is we would help you pick a reasonable amount to pay yourself. Okay, this is how you get paid from the S Corp. This is how you pay yourself money, essentially. You'll have your business income, your total income, and then you'll have your operating expenses, of course. But with the money left over, you'll pay yourself via payroll, a salary that you pay yourself. That's one way. And then you have distributions. And distributions and how you take a distribution is essentially just transferring your business profit from your business bank account to your personal account. You can do that whenever you want to and spend it however you want. And then also you can have reimbursed expenses. So any sort of business expenses or whatever that show up in your personal account, either accidentally or on purpose, the S Corp can reimburse you for those expenses and write them off as business expenses. Okay, well, here's some additional benefits about S Corps. More tax deductions, of course. You save in taxes when you're an S Corp. Higher retirement contribution limits. When you're self-employed, you can really increase the amount that you save for tax-free for retirement. And then you also have something called an accountable plan. And that's when the S Corp, reimburses you for your personal home office expenses, mileage, and other stuff like that. Okay, here's the difference between an LLC and S Corp. Both of them, since an S Corp is an LLC, of course, both of them provide a legal shield for your business and personal assets. You're still a pass-through entity. All your profits still pass through to you as the owner for an LLC and S Corp. However, the difference is the self-employment tax on profits. An LLC alone, you have them on all your money. With an S Corp, you don't. It's only on your salary. The income tax, they stay the same between an LLC and an S Corp. And with LLCs, you can't pay yourself a wage. Of course, you can with an S Corp, and so on and so forth. And at the end here, it's important. LLCs, they don't have any sort of business tax returns. Everything happens on your personal return, but S Corps do. You now have a business return that comes into existence when you form an S Corp. Which one's best for you? How do you know which one to get started with? LLCs are usually best for people with brand new businesses and businesses that aren't really sure, brand new businesses that aren't really sure how much they're going to make. But if you're pretty, certain on your profit, even if it's brand new, then you could still be an S Corp if you expect to earn around 60 grand or more in profit per year. That's kind of the sweet spot of if you're at least making this much money, that's when collective says that it's worth it to go the S Corp route. But if you're making below that, you should probably stay with an LLC. And, if you want a simple, just straightforward tax structure. S Corps is best for someone that wants to maximize their retirement savings. You can do that with an S Corp. But also for someone that earns more than $60,000. That's when it's generally worth it. And then, of course, if you have enough, cash flow to pay yourself a salary to make, regular payroll runs. All right, how to start and operate your S Corp. And also, too, with Collective, this is all the things that we would assist you with as well. One, we'll set it up. And the first thing we'll do is create an LLC on your behalf. That's the first step. And you file articles of organization with the state, get that formed. We'll file all the other state required paperwork, and we'll also draft your LLC operating agreement. And essentially, that's just kind of a document that it's kind of like the legal document behind your LLC. It outlines who owns it, how it's organized and whatnot. And it's usually a pretty valuable document to have if you ever need to go to court or anything like that. Then, after we set up the LLC, we'll make the S election for you. And along with that, we'll obtain an EIN number for you for the LLC. We'll file the S Corp election. Then we'll register for a payroll account with your state. And doing that on your own can get pretty complicated, believe me. And then we'll provide setup tools. For one, we'll handle your bookkeeping month to month. And of course, you still have access to the tools. You can use the bookkeeping service too, or the bookkeeping tool whenever you'd like to. We'll also provide you a payroll processor to handle your paycheck with, and that's included in the Collective membership. And then we'll set up your money flows. We'll set up how you get paid and how to structure the business. We'll help you set up a business bank account if you don't have one already. Business credit card, of course. will help you change kind of expenses and your clients all over to your new accounts as well. Then, how do you operate an S Corp? You'll need to file business and personal tax returns. Usually both the federal and the state. There's a lot of states that require a state level S Corp tax return. You'll need to file payroll returns. That sounds fun, right? You got to do that when you're on payroll and your business is structured as an S Corp. Then you'll need to maintain your entity. Keep filing your state paperwork. Maintain minutes and notes if you have a corporation. And then, of course, keep up the books and tax obligations. Maintain your books monthly and pay your estimated taxes quarterly to both the federal government and the state. All right. So hearing all of that, we've got another poll question. And are you ready to start an S Corp? Megan, what about you? Are you ready to start an S Corp or has it scared you away?
I have an S Corp.
Oh, that's okay. Fair
Yeah.
enough. Then you can't be frightened away. You've already got one. All right. Sarah, I don't think the poll question is up. If you could throw that up for us, unless I missed it, which is very possible. Maybe.
No poll.
Well, yeah, we might just have to skip the poll.
It's not launching.
It's not launching. Okay. Well, I'm guessing that everyone, of course, is ready and excited to start an S Corp. So we'll just assume that. All right. So what is it like on your own to have an S Corp without collective? And it can be pretty daunting, to say the least. You've got to know how to set it up. You have to know how to handle the bookkeeping software and how that's different with an S Corp. You got to calculate your reasonable compensation because if you don't, the IRS could have a problem with that. You have to file your S Corp tax return. Like there's a lot of things you got to juggle when you don't have a company like Collective on your side. But when you have an S Corp and you work with Collective, we rope all of those admin sort of requirements for the S Corp under one company. So it's really convenient and it's really cost effective that we're able to rope it into one package. And typically who we work with are sole proprietorships, people that don't have LLCs or anything set up, single member LLCs. So as of now, we don't work with partnerships. We only can work with you if you're a single member LLC, or if you're already an LLC filing as an S Corp. We can take you on too if you're in that stage. And then, of course, if you have 60 or more in self-employed, $60,000 or more in self-employed profits, that's really when an S Corp is the best. And then, of course, Collective provides one login to run your business. The concept behind us is there's not, several softwares and different things you got to juggle or have different, several passwords, several softwares. And the first thing we do, of course, is set up the LLC, make the S Corp election, and get all the kind of financial bare bones behind that too. Then we will take over your bookkeeping. And we close up the books month to month. So every single month, we'll give you those reports and finalize your reports for you. We'll make sure that the S Corp specific accounting is taken care of. And we'll take care of your accountable plan and get you those financial reports every month. Payroll, that's also included in the collective membership. We'll help you run your payroll. And then let's say that if you have any contractors working for you, like any 1099 contractors or people like that, then you can pay them on our payroll processor and it'll file the 1099s. It'll take care of all the paperwork and it makes it really convenient. And then, of course, the taxes. We will file your S Corp tax return both to the federal government and to the state if your state requires an S Corp tax return. It just kind of depends on if they do. And then also we'll handle your estimated tax calculations because you'll still have quarterly taxes in those each quarter. So we'll handle the calculations for those. And then compliance and then just general support throughout the year. For the compliance issues, we'll provide you on an annual basis to kind of keep up with your LLC and file all the paperwork that needs to be done. But also, you've got a support team that you can message at any time. And here at Collective, there's someone on your team called a member relationship manager. And you can essentially think of them as your account manager. So, if you ever have a question, need some guidance on something, or you're not sure how to proceed in your business, then you can have a consultation with them at any time. Also, something that's extremely important to keep in mind is that as of now, Collective can still backdate your S Corp election to January 1st of this year. If you have a current LLC in place, we're still able to backdate that S Corp election. However, keep in mind that we have a deadline of June 30th to do this. So if you're interested, especially if you made some good money already this year and you have an LLC in place, not backdating the S Corp election could save you quite a bit of money, potentially thousands of dollars. So just keep that in mind. And now to the cost. How much does Collective cost to handle all this and save you money with an S Corp? And you got two ways to pay the subscription. If you go the month-to-month route, it's $349 a month. And that's an all-inclusive price. Like there's no extra fees to file tax returns or anything like that. Or you can pay for 12 months at a time. And that saves you 15%. They'll give you 15% off when you do that. So on an annual basis, it comes out to around $35.60 a year. But also, when you first come on board, there's a one-time $199 setup fee to kind of, covering backdating the S Corp election, clean up your bookkeeping and all of that. And then, yes, hallelujah, Collective is tax deductible. So you can write it off. It's a business expense. So that's just another benefit. All right. And also another benefit is you get a free call with a tax advisor. Before you even join Collective, we like to sit down with you face to face. And I'm sorry if you hear my dog, he's in the corner freaking out. But we like to sit down to you face to face and, go through your situation, see if an S Corp would even be in your best interest, see if Collective would be a good fit for you. So schedule a free call with a tax advisor, and you can do that with the QR code. And what's even more exciting, if you use Megan's referral code, which is literally just her name, Meghan, if you take that with you to the call, you'll get your first month free and you won't have an onboarding fee. So you can essentially join Collective for free. And that's not a bad deal, especially if we're going to backdate your S Corp election, to the January 1st. That could be pretty efficient for you. So you can, first off, you can go to that link. You can use the QR code, or you could go to our website, collective.com, after this webinar, and you can schedule a call there too. Okay. And I think that's all I've got. So now everyone's favorite session, the Q&A session, where they get to ask whatever they like. And I think, so there is a Q&A box, but I'm not seeing it. And Sarah, if you see the Q&A questions, put them in the chat for me. But I believe it looks like Elizabeth has a good question. Okay, so Elizabeth asked, I recently elected an S Corp status, but will likely be making around $50,000 for this year. Does this pose an issue, or am I just not saving as much on taxes? That's an excellent question. No, so don't worry, it definitely doesn't pose an issue. And essentially, the entire reason why Collective kind of gives a general number of $60,000 is because when someone is making 60 grand and they elect the S Corp tax status, then they are generally saving around $5,500 a year in the self-employment tax. And that right there, especially if you go the annual version or the annual route with collective, is a good $2,000 above our fee for the year. So it's just kind of a good rule of thumb to say, okay, if I'm making $60,000, then I can reasonably expect to save more money than what I'd pay collective. But Elizabeth, even if you're making, $50,000, then you could very well, and it's very likely that you'll still save a little bit of money, like, above collective's cost. Or, you'll eventually reach a point to where you essentially break even with how much you're saving with the S Corp and how much you're paying us. But, a lot of times people still think that's worth it to join collective and handle the S Corp because they have all the compliance issues taken care of. And they can pretty much use the S Corp savings to pay for, to have their tax situation handled for them. Okay. Okay, yeah. Sarah says that's the only question we have. But well, Elizabeth, that's a great question. And okay, Megan, do you have any burning tax questions, or did we handle it?
I think you handled it. You did a great job.
Well,
Thank
thank you
you
very
so
much.
much for teaching all of us how to navigate taxes as business owners.
Absolutely. Oh, okay. Look, it looks like Sue has another question. So the 60,000 in profit is the final Schedule 1 number I'm currently seeing on my Schedule SP 1040. Well, I would go to your Schedule C, Sue. Like your schedule, if you have a self-employed business, go to your personal return, and your Schedule C should have your net income, and it should have your net profit. What happens if I don't have an LLC? Well, what happens is that your S Corp election starts whenever you set up your LLC. So essentially, let's say that you set up an LLC and you elect the S Corp tax status this year. From January 1st until now, you'll be considered a sole proprietorship, which means all your income and all your stuff is reported on your personal tax return on the personal side of things. But if you elect S Corp, from essentially from July until the end of the year, you'll be an S Corp. And all of that money will be reported on your S Corp tax return and whatnot. So that's how it would work if you didn't have an LLC. All right, here's another good question. Is electing for an S Corp status a one-way door? As in your business must remain an S Corp once it becomes one. Obviously, I can imagine a business may want to go back to being an LLC because we're always hoping for growth. But could you go back to being an LLC if you want to be simpler? That's an excellent question. So yes, technically, I mean, an S Corp is a one-way door in the sense, well, no, it's not a one-way door. But when you make the S Corp election, you do have an ongoing requirement for business tax returns. You now have an S Corp tax return every year that you've got to file when you make an S Corp election. And you've got to file that regardless if you make money or not. You still got to file it. So that's one thing. And then payroll requirements too. You've got to pay yourself, money from your own business. That's a requirement. But yes, it's technically possible to end an S Corp election. And how you do that is essentially at the end of the year, when you're filing your S Corp tax return, you can file what's called a final S Corp tax return and indicate that on the return, and it will end your S Corp election. So it's possible to end it. Okay, Jill has a good question. What if you are a contract worker and your company doesn't accept an S Corp for your onboarding? Well, I have heard that before. It's pretty rare, but I have heard that before to where some people won't work with S Corps. I find that very strange. Doesn't make a lot of sense to me. But if that's the case, then essentially whatever contract you have or whatever company's paying you or client, then their money would just be considered sole proprietorship money. It wouldn't be paid to the S Corp, it'd be paid to you personally. And that'd be really the only difference. So what if okay, here, Sue has a good question. So what if the profit in that case for the second half of the year doesn't go over $60,000? Well, the second half of the year, like for it to be kind of generally beneficial, if you reasonably expect to make $30,000 in the second half of the year, that's when it would would be worth it. And think of the $60,000, think of that over a 12-month time period. So really it would be worth it to do an S Corp now if you expect to make $60,000 now until essentially July of 2025, July of next year. Okay, Lisa has a good question. Would it be better to start at the beginning of the year, like 2025, if I need an LLC, or start at 2024 to get it all organized? Well, Lisa, it depends on how much money you're making. If you're making on average, like if you think over the next 12 months, you'll make at least $60,000, there's no reason to not start right now with the S Corp election. And the only reason I say that is because the longer you wait, the more that you'll needlessly pay in the self-employment tax. So if currently, if you're making enough money to where it makes financial sense, then you should seriously consider, becoming an S Corp for 2024. Okay, and I think that really is all the questions. I think we got it done. Okay. And Sue, you're very welcome. Thank you for the excellent questions, and you all had great questions. And I enjoy it so much. I love talking about taxes. I could talk about them all day long. And please, like I said earlier, schedule a call with us. And even if Collective isn't the best fit for you, or if you're not quite ready for an S Corp, or it's just not in your best interest yet, we'll tell you, and we'll point you in the right direction and give you some good referrals, and we'll go from there. And Lisa has one more question, which is okay. I love questions. So we'll wait for her to ask it. I love it. Do I keep my own FreshBooks, or do you have a platform? Yes. So with Collective, you wouldn't need any sort of bookkeeping software. Now, some people like to keep FreshBooks or Wave or like any sort of free accounting software, because sometimes it comes with invoicing and they like their own invoicing feature. But with Collective, you don't, all that's provided to you, to where we're handling your bookkeeping, but you can still log in and use the accounting software, use the invoicing feature and everything like that. So, most of the stuff that you can do on FreshBooks, you'll be able to do on the Collective accounting system as well. Okay. And I think we're good.
Thank
Okay.
you so much,
You're
Luke.
so welcome, Megan. And like I said, everyone, please feel free to schedule a call. We can talk more about it. But as of now, I think that's all I have. And I'll hopefully speak to everyone soon.
Oh, Sue asked, does Collective have invoicing?
Yes, Collective does have an invoicing feature. Yeah. And also, too, when you schedule a call with your tax advisor, come with a list of questions, and we'll be able to address them too.
Sweet. Thank you.
You're very welcome. Hopefully, I'll see you guys soon.
Thanks, everyone. Thank you for joining.